This is Horizon's Middle East and Africa. Our top stories this morning. Adding pressure, oil surges after the U.S. announces sanctions on Russia's biggest producers as President Donald Trump ramps up pressure on Vladimir Putin to end the war in Ukraine. Tesla shares decline in aftermarket trading after quarterly profit missed estimates, with CEO Elon Musk trying to shift investor focus to robotaxis and humanoids. And U.S. Secretary of State Marco Rubio is set to arrive in Israel as the Trump administration works to reinforce a fragile ceasefire in Gaza. It's just gone past 8 a.m. across the Emirates, 6 a.m. here in South Africa. I'm Jennifer Zabasajja in Johannesburg, in for Jumana Bersechi, and quite a busy Thursday. It's already shaping up to be. We were mentioning a few of those headlines there, but if you take a look at where we're seeing markets right now, pulling back ever so slightly from what was quite a choppy session on Wednesday, at least for U.S. equities. Let's just start with U.S. equity futures right now, pointing towards potentially a higher open. But again, as I mentioned, it was a volatile session on Wednesday. We saw the S&P 500 ending the day just below 0.5% there, with 7 of 11 sectors actually closing in the red. Big tech actually led a lot of those losses, with the momentum factor potentially having another sharp down move. We mentioned Tesla trading weaker after earnings and after some of the commentary that we did get from Elon Musk during that call. We'll walk you through that in just a bit, although we are still seeing the S&P trading near its all-time high. The yield on the 10-year is still below 4%. Relatively flat right now, but we did see a strong 20-year bond auction on Wednesday that helped support sentiment across the curve, that even continuing as the U.S. government shutdown continues on. Let's take a look at gold. It's actually declining for a third day, marginally, as you can see there, pairing its losses, though, from a volatile, choppy session on Wednesday for gold. At one point, we did see the precious metal down by as much as 2.9% during the day, edging back in the direction of about $4,091 an ounce there. And finally, oil. We mentioned quite a bit of geopolitical news that we're following this morning. Oil up just over 2.8% there. That coming after the U.S. did announce those sanctions on Russia's biggest producers. Potentially, we're going to see increased pressure on Vladimir Putin to negotiate an end to the war in Ukraine. Brent right now up just ever so slightly. But let's continue on to our top story. Trump is unsure the sanctions will lead to a ceasefire agreement, but here's what he said.
I don't know that they will. I think that they'll certainly have an impact. They're massive sanctions, and sanctions on oil. The two biggest oil companies, among the biggest in the world, but they're Russian. They do a lot of oil. And hopefully it'll push, hopefully he'll become reasonable, and hopefully Zelensky will be reasonable too.
Let's bring in our executive editor for the Middle East, North Africa, and Russia. That's Stuart Livingston-Wallace in Dubai for us. Stuart, what do you make of these comments? It seems like a bit of a U-turn from President Trump.
It does. I mean, I think it speaks to the frustration that you've been seeing. It's increasingly evident, I think, that Trump is coming to the realization, he has said so publicly, that, you know, as he says, they have these very nice conversations and they say very nice things to each other and then nothing happens. And I think there's a sense that he is finally running out of patience. But again, we'll see how long he can sustain this, because, you know, the track record here is that the rhetoric changes, you know, phone calls are made, overtures are made, and then the rhetoric changes again. So the question is, can he hold the course this time around to apply consistent pressure to Russia? And will Russia show any capitulation whatsoever in terms of its negotiating position with regard to Ukraine?
Stuart, we were just talking about where we're seeing Brent crude right now. I wonder if you take a look at these sanctions, if in fact they do stick, are there potential winners and losers in this scenario?
Yeah, absolutely. And that's something we've been looking at, you know, very carefully this morning. So sort of the initial take on this is that India in particular, and you've seen this very nice reporting that we've had out of Delhi very recently, saying that the refiners in India are likely to be running down their purchases of Russian oil. The question is, where do they then go to substitute in those grades? Because not all crude is the same. And traditionally, India had bought from the Middle East. That had declined in favor of Russia because it was getting this discount on the oil. In a scenario where they do indeed run down those purchases from Russia, one would assume that they'll return to the Middle East. And so that potentially means, a great deal more demand for crudes coming out of places like Saudi Arabia and the UAE. And remember, this is at a time when both of these producers have a lot of spare capacity there. So India was buying something like 1.8 million barrels a day from Russia. The UAE and Saudi between them have spare capacity of something close to 3 million. Now, that's quite simplistic in the sense that, they are part of OPEC and they will need to negotiate this. But there is certainly the capacity there, and I suspect, given where the oil price is today, they would like to be producing more and shipping it off to India.
Does this get Putin and Russia to the table, Stuart, or does this potentially frustrate the situation even further and we see another tit for tat?
Yeah, I think in the short term, very hard to call. And Putin has certainly shown no inclination to come to the negotiating table and negotiate in good faith. However, in the medium term, if these sanctions work, and that's a big if because Russia is very good about getting around sanctions, but let's assume in a scenario where they do stick and they are effective, that will pile a great deal of pressure on the Russian economy. And it's a war economy. It is geared up to be quite resilient, and it has been quite resilient over the last couple of years. But it will reach its limit, and there is only so far it can go. It's a very, very commodity-dependent economy, and if it can't sell the commodities, oil in particular, then it's at some point going to have to show some inclination to negotiate.
Yeah, we'll see where this goes for next for both of these countries and the rest of the geopolitical space. Executive editor for Middle East, North Africa, and Russia, Stuart Livingston-Wallace, starting us off there. Stuart, thanks so much. Now, the White House says the U.S. is considering broad new software export restrictions against China. This comes ahead of a highly anticipated meeting between President Trump and China's Xi Jinping, expected next week in South Korea. Joining us now is Farro Capital Chief Investment Strategist Hamza Ayub. Hamza, thanks so much for being here. Let's talk about the geopolitical space right now, because there's quite a bit of tension that you could read into it. How much concern do these comments overnight from the U.S. does this leave you with the current geopolitical setting?
Right. Geopolitics is always a tricky subject, right? And so is trade conflict. Our reading is that what we have seen historically also in the recent precedents that we have, it's more of a negotiation tool going into November, right? Both countries, US and China, have some kind of leverage. It's not like a cat and mouse game where US can dictate like it did UK or Japan and Korea. China is as big as economy and US, and sitting in Asia, the reading that we have, China has leverage, US has leverage. It's just that going into November, that meeting, both are trying to come from a position of strength. Eventually, it's in everybody's interest that a deal is made. It doesn't become a war of attrition.
What's your base case, though, for how this plays out? Do we see this November 1st meeting happen? Does everybody, all sides, get what it is that they want and we all kumbaya and move forward? I mean, what is it that you're expecting?
Right, in life, nobody gets everything that they want, but our base case is that there is going to be a deal. If not, the can will be kicked forward, like we have seen in the last few months. The reason why we believe so is because this situation is very tricky. We think that if the tariffs are imposed on both sides, it can disrupt, number one, global supply chains. Number two, it can hurt even US financial markets, right? And it has ramification across markets and economies. So that's why cool heads shall prevail. This is our base case, but we are also mindful of the downside risk, right? We have one eye on risk right now, given how markets have done over the last 6 to 12 months, right? We have seen rally across risky assets, and we are now going from a risk-seeking to more of a risk management approach and staying invested. Yes, as portfolio managers, we have to be mindful that if our base case does not turn out to be, what is the alternative? And that's what we are focused on right now, protecting the downside in case the deal does not happen, in case it becomes more confrontational.
Hamza, dig into the risk management versus the risk seeking. How are you structuring your portfolio then right now?
Right. It's a very practical question, right? Number one, what we're doing is that obviously we continue to be invested in US equity markets. US corporates are the leading corporates in the world. But on margin, we think that it's not the only game in town, right? We are a little bit underweight in certain sectors over there. Beyond the usual suspects where we remain invested, like technology, because it's a big theme across US and China, we are rotating our allocations, number one, more towards sectors which offer a little bit more defensive positioning and more bottom-up return and risk profiles. For example, in China, in Japan, in Korea. We are very much focused on, especially in Asia, all these value-up programs and corporate governance reforms. We have seen many companies, even in Europe, China, US, China, Korea, and Japan, paying back to dividends to shareholders, doing buybacks, and where valuation is achieved. That's number one. So in EM, we are focused in this kind of a space. Moving into some of the global exposures, we are very positive on global financials, which are more domestically focused, especially insurance, P&C. That's something we are very much focused on. And then also in healthcare and telecom, which offers defensive positioning. Healthcare is unloved, is inexpensive. A lot of bad news is priced in. So that's the rotation trade. Over and above that, we think that optionality is still cheap. It is not very expensive right now to hedge portfolios for downside protection, and that's what we're doing in portfolio. So we remain invested, but more focused on downside risk and risk management.
How much emphasis do you place, Hamza, on the delayed CPI print that we're going to get in the U.S. tomorrow? Does that potentially change your positioning, or do you sort of remain intact until we get some clarity on the geopolitical tensions that are out there?
So obviously, CPI number, we have FOMC meeting, we have the APEC summit, right? These are all, and we have the big tech earnings. These are all catalysts that can move markets. But as far as the September CPI number is concerned, right now it's kind of a non-event as long as it's between one standard deviation of consensus estimate, right? As long as CPI number doesn't move a lot, it doesn't really move markets. Markets really convinced that rate cuts are coming, unless, let's say, inflation or core inflation, core PCE moves close to 4%. So our focus is more towards big tech earnings, the APEC summit, and the FOMC meeting.
Let's just finish on gold, because we have seen obviously quite the swings from the metal over the past few days and even the past 24 hours. Our MLive team suggests that another rally there might be a slim chance that we'll see another gold rally. Where do you seek safe havens? Is this potentially an entry point for you if you're not already in gold?
So gold has been in a sweet spot, right? Traditionally, gold was either considered as a tail risk hedge, or it was considered as a debasement trade, right? Or it was considered as something which was very boring. Financial investors didn't have a lot of gold. It was mostly central banks or the physical buyers. This year, all three have come into place. Retail is very interested in gold right now. It's a psychological asset anyway. And then central banks are buying, and we have this debasement. We can't say it's fully a debasement trade, but still, it's become a risk asset to an extent, right? So as long as psychological preference for gold continues to remain, we still think there is a case to be made that gold has an allocation in portfolio. Right now, still in financial investors' portfolio, it is still not a very big weight in terms of overall allocations, right? So if we do continue to see some correction, right, that could be a good entry point for the long term.
Potentially, we'll see that from you. Hamza Ayub, Chief Investment Strategist at Farro Capital, joining us there in Singapore. Hamza, great to speak with you. Thanks so much. Now, coming up, Secretary of State Marco Rubio is set to arrive in Israel, working to reinforce a fragile U.S.-brokered Gaza ceasefire. We're live in Jerusalem next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. The U.S. Vice President has met with Israel's Prime Minister to discuss plans for a post-war Gaza with a focus on creating a civil government and security. J.D. Vance described the talks as a work in progress, but warned of tough days ahead.
We have a very, very tough task ahead of us, which is to disarm Hamas, but rebuild Gaza to make life better for the people in Gaza, but also to ensure that Hamas is no longer a threat to our friends in Israel. That's not easy.
Joining us now in Jerusalem is Bloomberg's Dan Williams. Dan, thanks so much for joining us. So what exactly do we know about these talks between the U.S. and Israel, and at what stage they're actually at implementing some of these proposals?
We know they're intensive, and we know they're a work in progress, such a work in progress that the Trump administration apparently feels the need to keep sending its top envoys to this part of the world. You just showed the Vice President Vance meeting with Netanyahu. The Vice President ends his three-day visit to Israel today. He hands over the baton to Marco Rubio, the Secretary of State. And of course, earlier in the week, the two White House envoys were already here to set the stage. That's Steve Witkoff and Jared Kushner. So what it appears is that the administration wants to bring sheer energy, momentum, a full court press, if you like, to Israel, to the Israeli government, in the hope of pushing this deal through to what's referred to as the second phase. That would be the fruition phase, the phase beyond the current troubled ceasefire, the phase that would bring about the wished-for peace deal in Gaza, one that faces many, many obstacles.
And we mentioned U.S. Secretary of State Marco Rubio also on his way to Israel, as you were saying there, Dan. Do we expect any more movement, especially if we think about what he spoke about with the West Bank? What sort of movement do we expect from the Secretary of State during his visit?
Well, it would appear that domestic politics, politicking in Israel, has already intruded on this U.S. diplomatic campaign, which is really focused on the geostrategic value of the Trump plan for Gaza. As you noted, there was a preliminary vote in Israel's parliament yesterday. Netanyahu referred to it as an opposition vote. Well, not quite. It was rightist members of the opposition with vocal support from some members of his own coalition, which would require the government to annex the West Bank, or what Israel refers to applying Israeli sovereignty in Judea and Samaria. Those are the biblical names for the West Bank. The Trump administration, the president himself, is on record as opposing such a move for the foreseeable future. This would be something that would disrupt Muslim and Arab support for U.S.-led diplomacy, peacemaking in this part of the world. Rubio felt the need to repeat that opposition. For now, I think it's really a backdrop, it's background noise to this visit. But I think it shows that Netanyahu, even while he tries to complete this Gaza deal, to draw a line under it and move toward normalization with parties in the Middle East, with powers that have held off, given the toll on Palestinian civilians in Gaza. Even as Netanyahu tries to do that, he has to keep one eye on the political field in Israel, not least as we are now effectively in an election year, with a new election, which Netanyahu will be contesting, expected by October of next year.
Wow, it's quite a bit to look out for. Bloomberg's Dan Williams in Jerusalem. Dan, thanks so much for the latest from Jerusalem. Now, coming up, we'll hear from GSMA Director General Vivek Badrinath, who says AI could add trillions of dollars to the African economy by 2030. But there are hurdles. We'll find out why next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The global body representing mobile operators says AI could add $2.9 trillion to the African economy by 2030 if industry players commit to adding underrepresented languages from the continent. GSMA Director General Vivek Badrinath is also calling for more affordable handsets to increase African connectivity.
As an industry, we've got together and we've identified, together with partners in this Alliance for Affordable Handsets, including the ITU, including some big tech players, we've identified what would be required to do an affordable smartphone that is relevant, that is durable, that is usable for people. And now we're going to the industry and saying, if you can bring the price down for this specification, we have millions of people who would join the mobile internet. So that's one of the big announcements of this event. But the other reason for the usage gap is the availability of relevant content. And the most important factor for content to be relevant is that you need to be able to understand it. It needs to be in your language. There are 2,000 languages in Africa. And those languages are not represented in the AI models on the internet. the internet is populated by the connected. So you need to bring the unconnected onto the internet, and you need to bring content to them in their language. So the second announcement we're making is about an initiative to get many languages into AI models. Operators have come together with ecosystem players, with startups, with public authorities who also feel the need to put the local languages online. And this initiative, I think, will also help to bring much more relevant content to people on the continent.
Vivek Badrinath, the Director General of GSMA, speaking there with Bloomberg's Ndiro Oganga at the Mobile World Congress in Kigali. And Ndiro is joining us now to dig into this more. Ndiro, there clearly is huge potential for AI in Africa, but share with us a bit more about what some of these participants at the event are saying about what could be on the horizon.
Hi, Jennifer. So just talking to Vivek, a couple of things came to light. One of them, he alluded to it, is how do we ensure that we provide smartphones that are required battery life to be able to deal with the electricity challenge on the African continent? Then how do you ensure that it's usable in terms of storage, in terms of screen capacity, but also keeping the price down? Because if you bring mobile handsets to about $40, you'll reach 20 million people in Africa. If you bring it down to $30, then you're about to reach 50 million people on the African continent, and globally you'll reach about 1 billion people. And this is really essential because while there has been this digital ecosystem boom on the African continent, over 1 billion handsets, only 413 million Africans are connected to the internet, and this leaves a very big gap. You look at the rollout of 4G, although it's doing really well, about 45%, expected to grow to about 54%, coverage is only 5% and usage is even lower. And this locks many Africans out of the potential of what connectivity brings, things like AI and just the digital innovations that are happening. And if you look at different sectors, health tech, fintech, agri-tech, these are all areas that could benefit from this AI boom and technology boom that we're seeing across the world. So there was a very pertinent conversation about how to rope Africa in. Even though we're talking about the potential, it was very key to bring in where the continent currently is. And MNOs are also not left behind. Part of the conversations that I was moderating, they were saying, we want to expand our services. We want to ensure that we penetrate rural markets, but if we're being taxed more than what other sectors like mining, which are resource heavy, are being taxed, then it makes it really difficult for us to expand our operations.
Yeah, quite a pertinent conversation there. Fascinating stuff from Bloomberg's Ndiro Oganga in Kigali reporting on the Mobile World Congress. Let's take a look at where your markets are positioned. Wednesday was a choppy day, and it seems like it's a bit of a mixed picture right now, though sentiment remaining a bit fragile. S&P futures and NASDAQ 100 futures pointing upwards in the green, but still it was a difficult day on Wednesday, a bit choppy given a lot of the geopolitical tensions, and of course we're still in the middle of earnings season in the U.S. Now, coming up, we'll speak to Morocco's Minister of Trade and Industry, Ryad Mezzour, as French jet engine maker Safran agrees to invest 200 million euros. This is Horizons Middle East and Africa. Our top stories this morning. Adding pressure, oil surges after the U.S. announces sanctions on Russia's biggest producers as President Donald Trump ramps up pressure on Vladimir Putin to end the war in Ukraine. Tesla shares decline in aftermarket trading after quarterly profit missed estimates, with CEO Elon Musk trying to shift investor focus to robo-taxis and humanoids. And AI in Africa. Startups on the continent are increasingly adopting Chinese AI models. We speak with Shikoh Gitau, CEO of Qhala, on what this means for data privacy in the region. It's just gone past 8:30 a.m. across the Emirates, 6:30 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg, in for Jumana Bersachi today. And quite a busy day geopolitically, but then also on the corporate front throughout the past past few days. We've, of course, seen earnings, but still there's quite a bit to pay attention to, especially as we look to Friday and that September CPI print that we'll get. But still, sentiment remaining a bit fragile. If we take a look at U.S. equity futures, pointing in the green right now, even though just marginally. But Wednesday was quite a choppy session in the U.S. We did see the S&P 500 ending the day down just about 0.5% there. Big tech leading a lot of the losses that we saw. Tesla, as we mentioned, they're also trading weaker after that earnings call that we got with CEO Elon Musk. The S&P, though, still trading near its all-time high. The yield on the 10-year just below 4% there. We are seeing yields creeping higher ever so much, but a strong 20-year bond auction on Wednesday did support sentiment across the curve. That even as the U.S. government shutdown continues. Gold is still an interesting story that we're seeing here, declining for a third day, down just about 0.3% there, still paring its losses from the session on Wednesday, where at one point we saw the metal down about 2.9%. A lot of that outflow coming from gold-backed ETFs, and it was the biggest outflow from ETFs in 5 months, though we are still seeing gold edging back in the direction of $4,083 an ounce there. And let's just finish on Brent crude, climbing almost just over 3% there after we did hear from the U.S. announcing sanctions on Russia's biggest producers in a latest bid potentially to pressure Vladimir Putin. It's the biggest gain that we've seen in 12 weeks. Brent crude trading at just about $64.51 a barrel there. Let's check in, though, on how markets in Asia are faring. It's been a few hours in the session over there. Avril Hong is standing by in our Singapore studio. Avril, what are you watching?
Hey, Jen, we're seeing Asia stocks edging lower today as well. And this is amid the backdrop of U.S.-China tensions resurfacing. Some reporting indicating that the U.S. is considering curbing China from access to critical software. But it's really, I think, in stock market trade today about the continued momentum unwinding. So you're seeing some examples of that, including SoftBank in Japan, SK Hynix, Samsung Electronics in South Korea, and then even on the Hang Seng Pop Mart shares doing really badly. That's, of course, where you get your Labubu dolls. Now, aside from that, also, we are highlighting what we're seeing on dollar Korea won. The Korean currency hitting the weakest against the greenback since April. And this is despite the Bank of Korea leaving rates unchanged. This was as expected, but perhaps what investors are positioning for is the majority of policymakers on the board, 4 out of 6 of them, actually saying that they're open to a rate cut in the next 3 months, despite the BOK sounding quite cautious for the moment and tempering some expectations of a November cut. So maybe that's affecting price action on the local currency. If you're wondering why the region's benchmarks declines look quite capped, it's because you're seeing some of these energy-related stocks gaining along with crude prices. Jen?
Thanks so much, Avril Hong in Singapore for us. Appreciate it. Now let's turn back to the region. French jet engine maker Safran plans to invest 200 million euros in manufacturing in Morocco. The deal will establish Morocco as one of the few countries capable of aircraft engine production and assembly. Joining us now is Morocco's Minister of Trade and Industry, Ryad Mezzour. Minister, thank you so much for joining us today. Let's just start here because Morocco has quite ambitious plans for the aerospace sector. How does this new investment get you closer to some of those goals?
Well, this is a paradigm shift. Thank you for inviting me first. This is a paradigm shift for Morocco, and we can give credit to His Majesty King Mohammed VI. It is the result of vision and hard work to maintain stability, financial stability, control inflation, reaching a growth of almost 5% a year, and a vision also to prepare these young people and the skills and generalize vocational training and generalize engineering in all the country, and a vision to enter into energy transition. And that's where the key major aspect that made Morocco have been selected by Safran among other countries. So good skills, stability, and energy, renewable energy.
Is the goal still 2030 for a locally assembled plane to take off? Does this get you there?
Well, the first aircraft engine will be produced, I think, by 2027, 2028, but the full capacity will be reached by 2030. It will be among 5 countries in the world to produce aircraft engine of that level, and this is like reaching the semi-final of the World Cup in manufacturing.
Let's talk about the World Cup and the situation in Morocco right now, because you mentioned the youth. A lot of the frustration has been too much focus on investment to the World Cup, not enough focus in other sectors. How do you respond to that?
Well, the same youth won the World Cup, the Football World Cup last Sunday, and we are celebrating them. We're very proud of them. So response is welcoming them in the political space, so making it easier for them to join the election, to join the public debate in the institution, and providing them financial support to get candidate to the election, 75% support, financial support of their expenses to get candidate, and making it easier for them to be candidate and propose their solutions. And the second one is accelerating the reforms in education and health, allocating $14 billion budget for these 2 major and essential sectors, and integrating 27,000 additional human resources to provide a better health and education service.
What does this say about potentially jobs in the manufacturing sector in Morocco? Are you at where you want to be, or do you think there needs to be increased investment potentially to have more jobs accessible?
We're having 1 million capabilities and 1 million Moroccans working in the manufacturing sector. We need to add, and we're planning to add 500 additional jobs in the sector, and we need more investment. We have a plan and we are executing it. We have trusted partners like Safran, like others, that trust in Morocco, that are investing more and more in Morocco, and we are building value chains for cars, we are building value chains for textile, we're building value chains for EV, and we are very confident that manufacturing sector will be a good sector to create better and good jobs.
Who are some of those other partners you're speaking with? We saw President Xi visiting the kingdom. Is China still a reliable partner for the kingdom?
Morocco is working with everyone. China is a good partner. Europe is a good partner. America is a good partner. Good partners are partners that are trusting in the Moroccan platform as a hub for the world, and that are creating good jobs in Morocco.
But where do you look to then for more investment, if that is in fact what you need?
Yeah, we are investing and co-investing with them in the automotive value chain, which is our first sector. We are having an installed capacity to produce more than 1 million cars in Morocco, and we are moving this capacity, and we're planning to move this capacity to 1.5 and 2 million. We are building the EV battery value chain with all our partners to deliver batteries for more than 1 million cars. And we are investing and attracting investors in the hydrogen value chain, where we have a lot of interest in Morocco. We are attracting investment in the aerospace industry, where only with this project, with this Safran project, we are planning to double our exports. So Morocco is very, very attractive for partners. It has a vision, it has a plan, and it's executing it as a reliable and competitive platform.
What about when people say Morocco domestically focuses, at least in manufacturing, on internal combustion engines? You mentioned EVs. How do you balance the scales a bit better?
So we will be the only solution outside of China in the region to produce the complete value chain of battery, from the component, from the material, the basic material, to the car. And we are already producing precursors, we will produce cathodes, we will produce cells, and we are launching, and our gigafactory is under construction. So Morocco is moving at a rapid pace to deploy its capability to build EV. We are already producing EV, but to build batteries for EV in the next months, not in the next years.
All right. We'll leave it there with you. Thanks so much. Ryad Mezzour, Morocco's Minister of Trade and Industry, joining us there from Casablanca. Thanks so much. Now, for a look at some of the other stories we're following from the region, Emirates NBD has reported third-quarter results that have beat estimates. The UAE lender posting profit of 6.4 billion dirhams versus the estimate of 5.8 billion dirhams. The bank is also revising loan growth guidance higher, citing a surge in demand in the third quarter, lending in Saudi Arabia in particular outperforming. Dubai-based classifieds firm Dubizzle has postponed its initial public offering a day before book building was set to begin. The company says it will reassess the optimal timing for the offering. That's after announcing plans last week to float 30% of its shares on the Dubai financial market. Analysts say the postponement likely stems from a mismatch in valuation expectations. And Chinese tech giants are making a big AI push into Africa, raising questions about data privacy and digital dependence. Up next, we'll speak to the CEO of Qhala, an African startup that has adopted DeepSeek in its AI development. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Chinese firms are courting African startups and innovation hubs with open source AI models. Huawei has been promoting DeepSeek as a cheaper alternative to OpenAI with the goal of making large language models more accessible to African startups and enterprises. While many entrepreneurs are embracing these tools for lower costs and flexibility, questions remain about data privacy and dependency on foreign infrastructure. To discuss what this all means, we're joined by Shikoh Gitau, CEO of Qhala, a Kenyan-based firm that has adopted DeepSeek in its AI development. And it's also our big take for the day here at Bloomberg. Shikoh, thanks so much for joining us. I wanted to just start here. When you're looking at an AI partner for your firm, what is it that you're seeking? And maybe what is it that Western providers give you that Chinese providers don't, or vice versa?
Okay, thank you so much for having me. When you think about AI, we look at AI from 4 different angles in terms of like, do we have enough data sets? Do we have compute? Do we have the skill set and talent to do it? And we have a market to launch our products into. And of course, there's a huge governance angle that we look at it from. And when we're looking at a partner, we are looking at who is the best to optimize across these 5 pillars, right? Can we have enough talent to be able to, is there talent to be able to train against the model? Is the cost of compute for accessing and training this model accessible and cheaper? Is it, from a data set point of view, is it able to understand our languages? Is it easier to train for our context and our culture? So those are the things that you're looking at when you're assessing which of the foundational models or frontier models are you going to go with, and you optimize for what works best for any of the use cases that you're building.
Have you found that some of the models from China just work better for the continent and for what you're doing?
They work better because they are better optimized for the emerging markets and the global south. And I mean, if you just dig a little bit on how DeepSeek was created, it was optimized for compute, for less compute use. And so you can imagine even it's like founding principles, if you may, are built around that is how do we enable people build under a constrained environment. So that's the ethos of DeepSeek, and you see it across the way they use it. However, in terms of like tokenization, they're still far. Everyone is still far. Even the Western models are still far. So we're still underrepresented. But when it comes to just cost of access and the way they build DeepSeek that you can run on very simple machines, you don't have to have like extremely expensive machines, makes it a bit easier and accessible for most people. Yeah.
Do you see Silicon Valley models, though, potentially changing in order to optimize and be better suited for emerging markets?
I was hoping you're going to ask me this question because DeepSeek was launched earlier this year in January. And I mean, doing some of the work we were doing last year was very, very expensive. And coming this year, you can see OpenAI, Llama, even Gemini are launching an edge version of their model, a low parameter version of their model that you can train with low compute, which makes it easier. Number two, it has incentivized like the frontier model providers to say, how do we support the emerging Africa and other, and I'm thinking about India and Latin America in building on top of this. And there's a lot of provision of like better compute credit to help you get into your first MVP. So I'm seeing DeepSeek did us all a favor by doing this because it enabled other people to see us as viable market, which is what I love about this whole competition. Yeah.
How do you think about data privacy concerns, though?
Oh, so I will say this. I'm from Africa. Yeah. 60 to 70% of data centers in Africa are Huawei run, right? Yeah. And the remaining all of us in the tech space are either on some cloud, Google, AWS, Azure, all of this. They're not residing on the African continent. So if I'm going to wear my African lens and look at data privacy, they all are the same. My data is not residing on the African continent, it's residing somewhere else, right? So we have to think of it from that point of view. It is not like I'm an American and my data is sitting in an AWS server in Texas. I'm a Kenyan sitting in Nairobi, and either my data set will sit in China or will sit in Texas. I have to choose where it's going to sit. So it is not it's that argument I don't find it aligning to what being an African means. There needs to be a better argument against Chinese model or Chinese cloud providers than just data.
Do you worry though about? Do you worry about getting caught up though potentially in the trade tensions by choosing one side or another?
I will say something. I think the Moroccan. I was just watching the Moroccan minister talking about their relationship with China and the US, and many of the African presidents have said this. Africa will work with a partner that provides the best for Africa, right? And yes, these are challenges. We're all afraid. I worked for both Google and Microsoft. I have great friends and we have great partnerships with some of those companies. So there's always that fear. But if we live from a point of fear, we'll never get anything done. So we live from a point of we need to get Africa moving, and we'll work with a partner that supports those priorities and is action oriented towards the betterment of Africa. Yeah.
Fascinating. Shikoh Gitau, CEO of Qhala, and also featured in our Bloomberg Big Take story. Thanks you so much for joining us and for sharing your thoughts. Now, coming up, Tesla reported a plunge in profit that undercut a record quarter of vehicle sales. We'll dive into the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Tesla shares fell after the New York close as it reported a plunge in profit that undercut a record quarter of vehicle sales. Analysts say there is not much to inspire investors as they question the timeline for developing new businesses like driverless taxis and humanoid robots. For more, we're joined by Asia Tech correspondent Annabelle Drulers. Annabelle, what was behind Tesla's profit plunge? Dig into some of the numbers here for us.
A really interesting quarter for Tesla. Of course, it was a time when they did see those strong sales. Like you said, it was a period when EV subsidies were ending as well. So there was sort of a rush we were seeing from consumers to go out and make the most of those. We did see some stronger numbers. For instance, revenue came in higher than expected. Margin was better than expected as well. But the big weakness was in the operating profit. And we saw a 40% drop in that. What that tells us is that essentially the impact of US tariffs is having quite a large bearing on the business. And Tesla said as well, actually they took a $400 million hit from these additional duties in that period alone. The concern for analysts, and you can see it reflected in the stock price there after hours down nearly 4%, but really reflected that yes, Elon Musk spent a lot of that earnings call talking about future growth drivers like humanoid robots, for instance. He's very optimistic on that front. But in the near term, how are they planning to revive the fortunes of their core business, the EV business? And we really didn't get too much clarity on that front.
Annabelle, let's talk about that pitch that we did hear from Elon Musk on the $1 trillion pay plan. How did this play out?
Yeah, this was quite an interesting end to what was otherwise a pretty ho-hum earnings call. But Elon Musk in the closing moments took the time to really push the need for his pay packet or his remuneration package to be approved. So there's going to be a shareholder vote on this in the next few weeks. The deadline for that is November 6th. But essentially, Elon Musk in the earnings call said that he needs to have control of at least 25% of the firm to ensure that he can really direct the path that it takes ahead. As I said, his big focus is on moving into humanoid robots. They're setting up production lines. He sees production of this by the end of next year. Robotaxi is another big business or big future growth driver that Elon Musk sees as well. But there has been a pushback on this remuneration plan that could total $1 trillion from some of the shareholder advisors. And Elon Musk was really making the point of why he needed that. Actually, the CFO had the closing word on the call, and he also reiterated that this was a package that was put together by a committee at Tesla, and it certainly did as well reflect that Elon Musk will need to hit certain milestones if he is going to see such a large salary from his position as the head of Tesla.
Yeah, I think such a large package is a good way to describe $1 trillion. Annabelle Drewlers, thanks so much for the latest there, our tech correspondent in Asia. Let's take a quick check at markets. We are seeing U.S. equity futures pointing marginally higher, but still coming after quite a choppy session and a fragile environment for sentiment in the markets. That is it for Horizons Middle East and Africa. I'm Jennifer Zabasanja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.